With the last few years experiencing higher interest rates, is lazy money still a concern for those of you with too much money in the bank or in cash? Watch this video as we further discuss. Thanks for tuning into the channel. I'm Logan Sadler here, the host of the channel. And today I want to talk about something that's been a very, very popular topic the last few years. Again, in many decades prior, it was as well too. But you hear a lot more about it, especially when 2022, 2023 timeframe, right? We're talking about savings accounts, cash alternatives, things that are in the savings realm, CDs, money markets, treasuries, things like that are finally and have been finally paying interest, right? A lot of you out there have seen these multiple decades. We've had a lot of lazy money. We've had a lot of clients that have extra money outside their brokerage accounts or their investments or their IRA accounts that have just not been making anything, right? And this past few years, it's been very, very nice for a lot of you to see those savings accounts paying 2, 3, 4, maybe even 5% in a lot of cases. Now, one of the things that's been awesome is seeing a lot of people that are savers that have extra money being able to park this money in a short-term or maybe even a very short-term liquid vehicle that is going to be paying you some interest, right, or some income on that. We've heard prior generations talk about, I used to get 5 or 10% in a CD or a money market, and a lot of you that haven't seen that in a long time, or maybe for some of you younger investors, this might have been the first time you've seen that, right? Because we've experienced a rather long, a decade plus of very, very compressed interest rates. So it is very good to see. One of the things I think that's great about it is, well, you have money invested, you have money in the market, you have money in real estate, insurance products, wherever it is you may have money, it's great to see those longer term investments pay off over time. However, when you have short-term money you might need for buying a car in a few years, or money you might be using for a house down payment or an emergency fund or things like that, it is really, really great to see that compound interest work when you're using those high-yield savings accounts or tools that can pay a little bit extra in savings. One thing I've been cautioning a lot of our clients about, because many of you guys know this, I am a financial advisor, and we do work with a lot of people that are transitioning into retirement or maybe right before retirement. And so a lot of the conversations we have been having over the last few years, while we've seen a lot of these interest rate hikes, is understanding the goal of what those interest rates are being used for on those investments, right? The big thing is a lot of the money that's going into those vehicles is very short-term money, meaning that eventually when rates come down, those investments can go from paying what we like, right, 3, 4, 5%, to maybe a significantly less. Now, we're going to do some other videos coming out on the channel about this further, but with expected interest rates coming down, it is very, very important that you understand how you're invested, making sure you know what investments you're in, and understanding that those investments are typically good for short-term money. You don't want to keep anything super, super long-term in there because you probably would do better in other longer-term investments. So understanding how potential rate decreases or rate slashes, however you want to call it, could be potentially happening in 2024, and understanding how that could impact that lazy money, right? So making sure you're aware of that. Again, very, very big fan of using some of those vehicles and making sure they're working for you during those time frames. So just wanted to make you guys aware on some of those things. And savings over the last few years or year and a half, we have seen lots of money, not just at our company or our industry, but around the board, right? Of people flooding into these accounts with the joy and excitement. And it's great to see some of that lazy money, dusted off and making a little extra. So keep doing that for those of you that is what your goal is with those specific dollars. And for those of you that are looking at other alternatives, there's always other stuff out there, but making sure you're finding out about your situation and what would fit you is super important. So keep a lookout as rates potentially decrease throughout this next year and how that might impact the portfolio. And again, we'll have some other videos on that coming up here soon. Thanks for stopping by. We'll see you again next time.